Travel FS Hub. So I made a call 3 days ago on bullish buy from 2,650 CCT 58 and the buying has continued. But let us look at something because the market is very, very dynamic and every buying at one point comes to an end. And the market is really creating higher high, higher low, 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 higher high. This might not be the end of this high. That's the truth. Or they might decide to make a low. You see, for every time this is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this might not be the end of this high, or it might just be it in the market to go down. But at the moment, we think the odds are in the favor of good buying. But let's look at some things. Why I have made some call. I made another call at sell at 2,711 after break of 2,700. Price moved 100 pip up, and I predicted a sell at 2,711, and the price dropped 100 and picked up to close the market in 2,600 or 724, which I also called that zone in my Telegram channel. So let's look at the structure and see what the market has done. So you see, at this level, we now our strategy is to sell from the break of the previous high. We treat it like business. So as a businessman, it's not you you don't want to buy high and notice that at the end of the day you're losing money. So it has to be a profitable business. So to make it a profitable business, we must make sure that we are selling high and buy low. That's the strategy. So now market is playing on two fundamental footprints, and I must list out those areas where the market is reacting. And everything the market is doing is well informed. It is well informed and completely analytical. Now we see that we're going to adjust this trend. It doesn't fit into our structure. We are more interested in the process of 4 hours candle. Now, the strategy we want to adopt in gold is to remain in 4 hours. So all your charts are going to be on 4 hours. So on 4 hours, you're going to stick for clear directional bias in 4 hours. So you want to have the first thing is to avoid cutting the body of the candle. You don't want to cut the body of any candle. That's not something you want to do. You don't want to cut the body of the candle. You don't want to do that here. So you want to make sure that you look for the most perfect crosses, and we're looking for green cross. All these are altering. They are altering line that demonstrate the structure of the market. And at every time, we want to make sure that we try to avoid cutting the body. We can cut off the head, but we don't want to cut off the body. So wherever we see wicks, we are free to cut the wicks, but we don't want to cut the body of the candle. The reason for not cutting body of candle is to give us a clear market reaction, because what we are looking for is break of structure. So we are using 4 hours body of a candle to determine our break of structure. So even a little pierce in a 4 hours candle, to me, it could mean a break of structure. So from that level, I begin to look for possible interest, depend on the trend of the pair at the moment. So what we have here is a technical outlook of SAUSD, and it looks Xavier first hub good. So we're going to rely on two structures. Let's keep it clean, and let's keep it clean and tidy, and also look at the possible case scenario as the market opens. The market is most likely to go into correction. I'm sorry to say it. I'm sorry to say it. I called all the level. I called 2711, take 100 pip and get out of the market. I didn't say remain there. I said get out at 2,000. 711, take 100 pip, and the market came exactly 2,698 and continue moving. So now I also call 2,724, 25, 26, and 28, and I will say what is going to happen next in the market. Now we have here a, a double top like structure. The most important thing is the market created a demand flow at this level. This is all we are interested in at this level. And we have a break of structure and price returns to create another demand flow, affirming the structure, affirming the trend line, affirming the trend angle. There are two things we are picking, the trend line and the trend angle. There are the two things we are after. Now, why are we after this? Because we'll be cloning it to bring it into other areas of market reaction to see if the price action align. If the price action align, it becomes a psychological trend line that is valid, that could give us a possible, area of reaction in the future. The idea behind this is to see where buying meets exhaustion, where selling meets exhaustion. Of course, buying cannot buy forever. Money is spent and buyers get exhausted. When they get exhausted, the same buyers become sellers. So this is what we must understand here. So when we talk of buyers and sellers, it's just one person. It's your buyers. So if you feel like buying, you will become a buyer. If you feel like selling, you become a seller. So it's not like it's a different set of people. So now we have here a very clean price action at this level, and you see that price action, market broke that structure. The retest came, but it didn't come exactly at this level. But when price came back, it respected that structure and sold down, validating this structure, meaning you have a sell down, indicating that we could have a sell down here. Look at the price action at this level. Market sold from here down. This indicates that we could have a sell down after price updating this roof. There is a very high probability that you will have a sell down. The last time price touched this supply roof, it sold down and returned to create a new high. So what we have here is a classic repetition of price action. And why is that happening? Is because this is all about business, all about making profits. So if somebody opens a long position at 2,655 and price manages to get to 2,724, to be honest, as a businessman, it makes a whole lot of sense to sell and take your money, knowing well that the market is dynamic. One small fundamental analysis, just one small fundamental analysis will crash all this. The reason we saw influx of liquidity today and a continuous buy sentiment into the yellow metal is because all the data analysis provided today by the US Department of Statistics, everything was negative. There is none that favored the DXY. In fact, the DXY today was tailed. The greenback couldn't move today. It was stuck. So of course, the gold buyers had no option than to continue to rally to push the price with the intention to sell. So they are not buying to get stock, they are buying to sell. This is what we must understand as small petty traders. So let's treat gold trading as real life gold merchants. If you are trading gold as in gold online, treat it like a gold merchant. When you buy, you make profit, you sell. You don't buy and keep. The only way you can buy and keep is when you buy low and you anticipate that this low is comfortable enough, and you are looking at the economics of trade that's surrounding the yellow metal, the commitment of trade that's surrounding the yellow metal, and you can anticipate that in the next 5, 6, 7 months and the next 8 months, that gold will continue to surge. For now, I'm predicting a surge in the price of silver. I am making a decree that silver price will continue to surge into 2025 into 2027. Silver might leave the 33, 34, 35, 36, 37 zone and move to something more because of its industrial application. So let's go straight to the point. And this is what we have here. And at this level, the the market has come back to, after retesting this structure, it broke the structure and affirmed the roof. A break of the supply roof becomes a demand floor. On that demand floor, price has moved on to add another layer, 2,725. After breaking the supply roof, it becomes a demand floor. And what do we have here? Price have come here because price broke out from the demand floor. It didn't retest the demand floor. So on technical, a broken demand floor after a long time travel. I'm not saying immediate travel. Look at the last time we left this place in the month of December 12th. So we have approximately 30 days price departure from the demand level. So price return to respect that level based on principles of break and retest. So what this is saying is that technically that price will continue based on what it has done here. After hitting the roof, price drop down. There is a probability that price will continue to drop until we get into 2,703 level, where we see another bullish momentum. So let us just stick to these two charts. This is all we need for now for this pair. This is all we need for now. This is all we need. Then the next I want to introduce in line is our long-term ascending trend line. This trend line is very much and so much important to me. I've been following this trend and I want price to return into this level. And at this level, it would be nice to see that you have a good trigger at this level. So at this level, I'll be looking and monitoring the price action because the price action is valid and we have cloned it and placed it on a different trend line and they really come out well. So we believe that in the future, price will return to this level and give us a strong bearish drop. When you look at the structure, you will find that we have a strong structure at this level. The structure we have here is break of structure. After price creating a demand floor, demand floor, demand floor, break of the demand floor becomes a supply result. Technical, I'm waiting for another level of sell if price returns into the zone of 2,746, 47, 48 up to 50 as a valid sell zone for the price of the yellow metal. So this is what we see. Let's remain with three lines. Let's keep it clean. Let's keep it clean. The more we keep it clean, the clearer we have and our ability to translate the market actively like institutional traders.